Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, September 27th, the year's 2020. Let's talk trading. Time for the weekly open and gap. But first, let me just tell you that these videos are for educational purposes only, and your results may differ from mine. So let's take a look here and let's see. We've got some gaps that have not filled. We've got the pound dollar has gapped up. It gapped up 11 pips, and that gap has not been filled, so looking to fill that. And you can see there's a few others, but all the rest of the gaps have filled, and you can see the spreads calmed down, 1.5, 1.6. So it's definitely tradable. Now, we've been open for about 3 hours here, but really haven't moved that much so far. And you can see that pretty much here. We're sitting right there at the weekly open, putting in the high and low for the opening range of the week here. For the year, we're 489 pips below the open. And we don't have an inside bar at the moment here. We're above the monthly high, but below the weekly low. So no inside bar trade as of yet on the pound. But there's a handful of others across here. Anything in blue or gray gives you inside bar opportunities. Whoops. And you can see the daily ranges are all pretty much tight right now. Once again, only 3 hours and 8 minutes into the trading day. Buy zone. We gapped up. We have a pivot point below the open. So right now, we'd be looking to fade that pivot and fade the gap. So it looks like the pivot in the let's see, last week's high or last week's close was 468. We've got a 460 on the pivot. So it looks like might want to get it might take out both of those at the same time. Close the gap and close the gap on the pivot. Not enough range in the rat zone. So look for price expansion. In fact, there was a trader that said he had the wick zone, the rat zone, and the buy zone. He was ready to trade. And I have to caution you, trader, pick one method, pick one pair, and stick to it. Okay? Really, before you start juggling, because buy zone, you're trading away from the open. The rat zone, you're trading towards the open. And the wick zone, you could be trading away or towards the open. So you need to pick which method you want to trade. And people say, well, which method should I use? Well, that depends on when you trade. If you're trading, say, London session, you might think to trade buy zone because price is going to expand into the range. Now, if you're trading a New York session, you might think to trade the rat zone because price might make a new high or low and then reverse. And then if doesn't matter when you trade, if price is back near that daily open and it hasn't hit its the range, either an average range or an ATR range, or a frequency distribution range, then definitely you'd want to trade away from the open price. Weekly pivot 1.27958, call it 96. Let's look for that weekly pivot to get taken out this week. We'll just see what happens, of course. And on the daily, you can see we haven't quite touched the pivot yet, and the weekly pivot is above. But so far, we've only missed 3 weekly pivots this year. But for the month of September, which we've got 3 trading days left, we've already missed 2 of those pivots on the weekly. So let's see what happens. And one of these pivots is the current week's pivot. So let's see if that gets taken out. And looking here at the wick zone, you can see we've got a huge wick zone, not much space in between it. So I would think price might just stay within the wick zones, for it might be trading back and forth across the wick zones. We just have to wait and see what happens. Speaking of ranges, I mentioned earlier, you can look at the daily range, high minus low here, and you can see 21 toward the 0 percentile. But you can get an idea of where you'd probably want to start looking for reversals. And the high minus close, that gives you your rat zone figures. And you can see here's one that didn't come out of the usual rat zone so far. That's today, but excuse me. On Friday, you can see we high off the close was 58 and close off the low was 60. So both rats were fed that day. But you can see here, 4 days ago, we only had 20 pips off of the low. So the red rats, maybe some red rats got a couple of crumbs of cheese, but not much to be had. And so that's how you want to look at these ranges. And so you've got the high minus low, but also high minus close and close minus low. Because if you add these two together, you get this one. It's just dividing it up based on the closing price versus the high and the low. On the flip side of that, if you can look here and you can see the daily range high minus open. This gives you the buy zone. So if you went long, you had a chance to maybe make 50 pips. And if you went short, well, I can't see it because I've got that other indicator taking up some chart real estate. But I guess I could. Might as well just take this off because I usually don't switch. But here, so open minus low, you had a chance to make maybe 40 or 50 pips on that buy zone trade. So you can see you can trade the buy zone and make money, or you could trade the rat zone and make money. So that is up to you. But I really caution you, when you start out, one method, one pair, keep it simple so you can focus and you won't miss your entry. Just looking at a trading screen here, you can see here it broke out of the previous M5 candle high low. There were some scalping pips to be had, 1 or 2 pips. Usually I don't trade this time on Sundays, but you can see it's still possible to make pips following these methods. I mean, we have the Walmart method here. You can see there was the short trade here off of the 60 line. Now it's pulled back. You'd only be up a pip if you stayed in, but you had a chance to make 5 or more pips on that trade. Once again, just showing how simple statistical type trades can pay off. Now, at this hour of the day, usually you have these ranges that are really, they're less than 20. Normally during about halfway through the London session and through the New York session, about halfway through the New York session, there's about 8 or 10 hours where the range is usually over 20 per hour. And it's easy to pick up pips. And one of the things I was noticing about the pound was, and I might bring that up later in the week, was I was looking at the M15 and the ranges were pretty hefty. You could actually trade M15 and sometimes you could pick up 10 pips or more. You can see that right here from the previous day. I mean, these are M15 candles as opposed to normally trading the H1 candles. So once again, this is just using statistics, statistical trading, basic physics, math, geometry. It's not too hard to see that if you've got something that's bigger than 10 pips, it's not going to fit between these two lines. It's going to stick out one end or the other. So you can see here crossing this line, it came above. Now, of course, some of these don't cross two lines, and this one just barely crossed one and pulled back. But even if you took that trade, you could see here on the next one, it gave you an opportunity to take profit. It's just something to note, and I might dive into that a little bit more and see what happens, because you might be able to hold a trade longer than if you're trading off of M1 and getting a reversal signal. But you might say, I got confidence on this candle is going to be bigger than a certain amount. Same way we do with the hour candles. You take this trade here, and you don't know what price is going to do, but it's like, is it going to go up or down to make those 10 or more pips? And you can just take the chance. Say, well, I'm buying. I'll put my stop in. I'll sit back and I'll wait. Sometimes you wait for the candle to close to get it. Sometimes you might have to take it before the market takes it back. That's up to you. It happens all the time. And sometimes it's just simple analysis. When you look at the chart here, you can see it put a 3-ball here, and there was a 2-ball here and a 3-ball here. And you can also, just using your eyes, you can see you only had one open below the 2700. Actually, let me take that back. It looks like you had 2 opens below that 2700. Basically, just a couple of closes below it. So you see price rejected here, and once again rejected. So not, using any squiggly line indicators or other technicals, just looking at the chart, you can just see how price kept pushing out of this area, this 90 area. It pushed out, 1, 2, 3 days in a row. I mean, you can call it what you want, but just the simple fact that price didn't close below the 90 in the past 3 days, it only closed between 90 and the 2700 line a couple of times. So taking trades, long trades here, would pay off. Now, somebody go, well, that's hairy hindsight. Well, no, it's not. This is what we look at every single day. And you can see even here when it started, price came way down, shot up, came right back down, shot up again. Then 1 tap, 2 tap. On the 3rd tap, it broke, but then came back up. And you see here, it tapped it again, and then it broke. So you tapped it once, tapped it twice, tapped it 3 times, and the 4th time it broke. Shot back up, never got below, shot back up. Now it even crossed above the 2800, but how many closes? You take that short, you could have maybe paid off 100 pips. It's hindsight, yeah, but the thing is, this is how we analyze the trades. You just have to look at the chart and take your chances. And just using simple analysis, no squiggly lines, moving averages, or any of that others. Just look at the chart. What's the chart telling you? It's telling you it's rejecting price from this level, and it seems to be rejecting price, from above this level. So right now we're stuck between, it seems like between 00 and 70, looking for, and so since this has been happening now for 3 days, pretty much price is going to either shoot up or shoot down. It doesn't like to stay confined for any length of time. But just remember, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks this week. And if you're new, welcome to the channel. Please click subscribe, click like. This is the Rumpled One, over and out.